Welcome everybody. All right, so this is going to be the actual video of how to enter the trades, okay? But this is the second video, okay? The first step in this process is understanding liquidity, okay? And understanding the liquidity trading strategy. But you have to understand fair value gaps. You have to understand market manipulators and market manipulation. Those are the two things you have to understand. Three things you have to understand. You have to understand what is liquidity, then you have to understand fair value gaps and order blocks, and then you have to understand what the market manipulators are doing. Okay, so there's three steps you have to know before you get to this step. Okay, but this step is just about how to actually enter the trade to make a lot of money. Okay, so this is typically for NQ future trading. Between the hours of 8:30 a.m. Eastern time and 11 o'clock Eastern time, okay? And this is for regular trading days, not big news days or holidays or low volume days, okay? So step one, though, determine your daily bias. It's basically you're going to determine your daily bias by looking at the daily chart, okay? And you're just trying to determine, is it bearish or bullish? Are you bearish or bullish, okay? And you basically look at the daily chart and then you confirm on the 4-hour chart. And if you cannot find the daily bias, because this is literally step one, then you have to sit on your hands. That's what SOI stands for. Sit on your hands. Now it is Sunday, so the markets aren't really open. It is kind of hard to determine because we're literally coming back up to this high, right? So we hit this and now we're red, right? And then we're going to go to the 4-hour. Now the 4-hour still is mildly bullish, right? We can all agree that if we drew a line right here, technically we are still bullish, okay? So really what I'm looking for my daily bias is I'm going to wait for one more run to the top of this basically, to the top of this to double tap. And I want to see what we do from that point, right? So my daily bias is currently still bullish, but with a caveat that I'm very clearly looking for what it does when we retest this. Because if we retest and then we break through, then I'm going to continue bullish on the upside. But if we retest and then we bounce off, I'm going to predict that we will start to tear down, basically. I have a bias, not super crystal clear. So technically, if I'm going back to the rules, I'm going to sit on my goddamn hands until we get back to that point and we make a correction, okay? So step one, though, on normal regular days when you're looking at your markets, have your daily bias. Am I bearish or am I bullish? And have it very, very concise, okay? Step two, you're going to mark out your pivot points. Okay, and you saw how when I did the daily bias, first I started with the daily. Okay, we looked at this. You know, we're probably going to come back up to this range, and then I'm bullish until we hit this range, and then I don't know what we're going to do. So I'm going to sit on my hands until we hit this range, and the market tells me what we're going to do. But that being said, there is a very large fair value gap right here that I'm just now realizing. So I'm kind of interested in that. This fair value gap is from right here to right about here. So that makes me a little more bullish. And then let's confirm it on the 4-hour. But there's also one down here as well. So there's two fair value gaps that are points of interest. So these would be our buy boxes, though, that we're looking for a key reversal point. And we'll go to the 4-hour. We'll see if we see any clear. Yep, right there. So there's the fair value gap is still right there. And the fair value gap is still right there. Even though this is actually a little smaller because of these candles. But it's still right there. Okay, so now we have two alternative ways that the market will go. So from my experience, typically what I have seen is the market will come up to this fair value gap, and then we will tank down to this fair value gap. You know, that's just, again, we're talking theories. But these are my 2 points of interest. These are my 2 buy boxes that I'm very interested in. This line is where we might bounce off. So anyways, step number 2. Mark out your pivot points or ideal buy boxes. Okay, so my ideal buy boxes will be up here and down here, and the pivot point is this line, right? We're definitely gonna come back up, and we're probably gonna hit it. So I see it at the 4-hour. I'm gonna switch now to the 15-minute to confirm, and I'm gonna mark out my buy boxes on the 15-minute, the buy line right here, which was yesterday's all-time high. And then I'm looking for fair value gap, and I see it. And here's a fair value gap. Boom, boom, boom. At this pivot point is going to be an interesting position to be in. I just don't I just don't want to put a buy box there because it's not like, it's just a point where we might reverse, but we also might go higher. So I am aware of this area, but I'm not going to say this is a place where I want to buy, right? So here's a big fair value gap that has not been filled. Okay, so here's another fair value gap that has not been filled. So there's 2 big fair value gaps. Okay, so if we go break through this one. But anyways, these are my key points. But above here is going to be very interesting, and if we break above, we're going to go higher. Okay, so those are my buy boxes that I'm going to be looking at. Key one, again, though, was right around the 400s, okay, according to the 4-hour. So 2400. So I'm going to go back to my 15-minute. I'm going to mark that out. So right here. So that's way up there. And these will get closer as we see what the market does on Monday, right, or Sunday. We got this real big, most recent fair value gaps are going to be right down here. So I do think we will either chop straight down to the fair value gap and just drop, or we will come back up here, test the highs, and we'll have to see what happens. So I will, if we go towards the highs, I will sit on my hands until we hit this. If I start to see a breakout back down, I will assume this will be my exit point. Okay, so now I've marked out my pivot points in my ideal buy boxes. Next step is to wait for the market to enter one of my buy boxes. Okay, so now I'm literally just going to wait for the market to enter either up here or down here. Then I'm going to be basically waiting for a sign of manipulation. Okay, and once it hits on the 15-minute, I will enter on the 1-minute. Okay, and this way that we determine a market manipulation is there's really 2. Okay, this is called the crocodile right here. So you're looking for big move down, big move right back up, and then a continuation. All right, that's a very clear sign of market manipulation. You can also see how high these candles are, and that's a big volume boost, right? The volume definitely exploded right there. The main ones that we're looking for, though, are more like these things. So this is what a market manipulation is. I mean, this candlestick, right? It came down, shot right back up. Big green candlestick right there. That's our first sign of market manipulation. And then we see one more candle break through the bottom, bounce, and then that's when everything took off. Okay, so almost always there's 2 pretty good tells of market manipulation before the move. Okay, so first we had this big red candle down, we came back up into the fair value gap, swept that, came back down, bounced, and then we had 2 attempts, or quite a few attempts really, to go higher here. Okay, failed both times, fail, bust down. We have this first breakthrough down here, big pickup. Show these green candles after a big red candlestick shows that the buyers are stepping up. And we have one final big push to basically clear out all the shorts that were underneath this candle before we take back off. Okay, but you almost always see this before any big move. Okay, same thing with here. All right, so we have we end up hitting this ceiling, right? So we had this big push up here, okay, and then we hit and we stopped and then we reversed. Okay, then you see down here we reversed to here. We had this big push here. The candle busted through, reverse, busted through, reverse. Finally, we get back up here. We try once, down. We try again, down, 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 and then finally, after about like 1, 2, 3, 4, 5, the 5th time, everybody decides, okay, we're not going any higher, and it just collapses. Boom, boom, boom. And you catch this big ass move. Okay. This would have been a great entry point, this big at the top of this big green one. And if you missed that, then we would just wait for it to come back into range, and we would just be looking for an opportunity to short here. But the market manipulation is you will always, not always, but in almost every single one, you guys see that big move up, rejected. That's where you enter. Okay. Same thing down here. We kind of expected it to flip back here. Tried to go higher, rejected. Tried to go higher, rejected. Down we go. Okay, and then we finally find the floor, right? We finally find, hey, we finally stopped here. This is now our rejection, but as you can tell, we stopped going up here pretty much as soon as this right here happens, you become bearish, right? You're now bearish because you can see that the market had this, pretty good climb up. I mean, actually, it was still bearish. Like pretty much since over here, we've been bearish. So on a bigger time scale, a lot of these marks are just bearish now since that move. Ever since this move right here, the market has been very bearish. Since we are feeling bearish, we're looking for, whenever we break out of this range, like look how tough this range was. It was like doop, 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 and then finally, boom, could be the floor, and now we're bullish again, right? You could make an argument that now we are bullish again. So we were bearish from here until here, and then now we are bullish again. So that's another way to determine your daily bias. But you guys can see this, right? And now we're just waiting for them to enter into our buy box. And what you're looking for is, before you enter the trade, you know, basically we're gonna have to determine our daily bias. So now my daily bias is definitely leaning more towards bullish. But again, until we come back up here and we push through this, once we push through this though, that's going to be a huge sign that we are bullish. Okay. So that's going to basically take my daily bias. And then every time that I see a big drawback, I'm going to get in, because I'm going to know we're bullish, we're bullish, we're bullish. Okay. That's how you can determine this kind of stuff. This is very, very powerful. But you're just looking for market manipulation. Like even this little stupid green candlestick, I mean, it's not a very good market manipulation right there, but it is a higher low, right? And it's off the VWAP. This one was off the VWAP as well. The VWAP is just this black line. It's like the trailing averages of the price. Okay. But you're always looking for one final push that breaks through the previous floor to a big return. Okay. So a big shoot up. That's how you can tell what a market manipulation is. And that's what your tell is to enter the trade, is what I'm trying to say. Okay. Is market manipulation. It's a unnatural push, rejection up to the higher ones. And the reason this is because the market makers, if they want it to go higher, they're gonna force the retail traders to sell. Okay. So they're gonna push it down, just so they can buy up all the shares at a much cheaper price before it goes back up. Okay. Another thing is like internal and external liquidity. So like right now we are in this big box of internal liquidity. So we are currently in this move right here's liquidity. So we were down here. We had this big move up, which is kind of a sign that we might break back down. But we will see. So again, we're at a kind of a weird day for me to be teaching in this, but this is the market. Every day is a weird day, right? But you see how we are inside of the liquidity of this last move. So this is internal liquidity. And whenever we are in internal liquidity, it is typically trying to break out to go to external liquidity, right? And then we have this big old fair value gap. Well, it's not big. It's like a very tiny little fair value gap right there. We also have this candlestick, which is a sign of liquidity. But then we also have this big fair value gap. So like if I'm looking on the 1 minute, there's two clear fair value gaps. And typically when there's also this big stick of volume right here, which has not been, this is an imbalance, right? We came down and shot back up, and we have not filled these orders. Okay. But this was filling this fair value gap actually. So the only real fair value gap is this one, which is very tiny little fair value gap right there. I guess there's another one right here actually. So there's a few down here, but not like any big overarching ones. Okay. So, I mean, we're on our way up to this fair value gap. And then we'll probably tank down to these ones in theory. Now, and that would be a very good sign of being bullish or bearish. Okay. Now, if we come up, if we blast up to this fair value gap, we bounce off it, and then we continue higher, we are going to be bullish. If we blast up and hit this fair value gap and we just crank down to here, we're going to be bearish. Okay. So, but we're still looking, as soon as the market enters into our buy box, we are going to enter the trade. Okay. We are going to wait for a sign of market manipulation. Okay. So it's going to enter into our buy box, and then we're going to wait for a big push and then a candlestick that gets totally swept into the next position in the confirmation. So we are looking for the market. We are sitting on our hands until the market hits our buy box, because these are points of interest. Okay. then we are going to be entering the trade with one contract at a stop loss of 500. Now you can make your stop loss smaller. You could probably enter with more. This is just from my experience though, okay? Because again, a lot of this is very much speculation, and the real results that we're looking for with this liquidity trading strategy is about a 6 out of 10 success rate, okay? Now, here's where the important stuff is. Let's imagine that we would have caught this move, okay? So we came down, we hit this floor. We see that this fair value gap was formed, so we know the market's going to go back into this fair value gap. So we say, okay, I think we're going to go long. We would have caught this one because this would have been our imbalance that we were looking for, and we would have rode that bitch all the way up to here. From 36 to 86, crazy move from boom, boom, boom. They're like 150 points. What am I talking about? Okay, but if we catch one of these, okay, and we hold on for dear life, right? And we push through all of the wants and the times that we wanted to get out. This is huge profit, okay? This is maximum profit. Now, it's not about entering every single one of these opportunities to catch one. It's about identifying the key points where the market is going to move. We're identifying when we see market manipulation as our sign to enter the trade, and then being smart and holding our profitable trades for as long as possible. You understand? That's also why when we enter the first trade with one contract, just as a proof of concept, okay, but also to not miss the trade. I mean, one contract and 100 points, like that's a lot of money. It doesn't matter. Even if you never double down, it's a lot of money, okay? But we were entering with one contract, stop loss $500. And many times, right, we will see this move, right? Maybe we'll see this market manipulation right here, okay? And we'll have entered the trade. We'll have put our stop loss, like let's pretend we enter that trade. We put our stop loss at the bottom of it, and then we get taken out here. That's fine, okay? We also could have gotten a big launch right here, and we could have trailed our stop loss and made a profit as well, okay? And then we could have seen that it breaks out, and then we entered again here because we are bullish. But I mean, basically, so we would have seen here daily bias. This has been a pullback. We're looking for another leg up. That's what we're looking for. You guys see this? Okay. But you would have caught that one trade with one contract. Okay. And the way that you scale is as soon as you see the confirmation. Okay. So you would have, let's say, you got in down here, on this contract or whatever, or on this one market manipulation. You say, oh my God, we fucking broke through the resistance, and then we reversed. Okay. Reverse breakout. Then maybe you entered your trade right here. The way that you trail this is you basically move your stop loss, so you would put your stop loss at the very bottom here. As soon as you enter the trade, you are at the very bottom of this candle because that is where it started, okay? And then you will only move your stop loss every time that there are 3 1-minute candles, okay, that are in your direction, okay? So then you would have moved so let's say you entered it down here, your stop loss sits here. 1, 2, 3, and then you have this little pullback. And now you move your stop loss to this one, okay, to the bottom of this candlestick, and then you wait 1, 2, 3, have another pullback, and then you move it here, okay, 1, 2, 3. Now you can move your stop loss here, but you see how after 3 candles, right, it never really breaks below that third one, okay, and you just keep running this up, 1, 2, 3. Okay, then you put your stop loss there. Boom! It shot all the way up here. And now we have a red candle, right? So we only got 1, 2, and then we had a green one here. Boom, right here. We can go here. We can put our stop loss right here. And 1, 2, 3. We would have rode it all the way up to about, here. And then we would have got taken out, okay? So that's just one way to safely continue to stay in the trade as long as it's going in your direction, okay? And then when we see this big move down and we now know that we're bearish, maybe we enter in again here and we can continue to the next side, because then we see this pullback, we wait for it to pull back into this small fair value gap and ride it all the way up. Or, you could basically have just like sat on your hands if you're professional and just fucking kept going, right? But I like the 1, 2, 3, the 3 candles, because I mean, you would have caught most of this first leg, okay, with as many contracts as you entered, right? I mean, especially if you scaled in, okay? So the first thing is you got to enter the trade with 1, okay? And then once you get your first confirmation, okay, so our first confirmation would have been, okay, boom, we see this reversal. We come back down, boom, this green candlestick would have been our first confirmation. Okay, yeah, we're going higher. And then that one you would have entered an additional 1 to 4 contracts. So we're only looking for 5 max, unless you're a psycho, then do you. These are mini contracts on the NQ. Okay, but you enter with 1 contract. As soon as you see the confirmation, you're doubling down, okay? And then now you're holding for every, but you're trailing with your stop loss 3 candles back. Okay, and you're trailing and you're trailing and you're trailing, all right? And that's how you can basically make sure that you capture the most of each move. And then, like, I would also be wary once you hit the VWAP of it reversing. So you maybe want to do it better. But then once we break through the VWAP, that's a big confirmation that, oh, we're going a lot higher. Okay, stuff like that. Same thing if we're going down. If we break the VWAP to the downside, oh, we're about to dump, right? So you want to make sure you're in whenever we pass through the VWAP or these other fair value gaps. So yeah, that's my strategy. All right, I hope you guys appreciate this. I hope you understand it. Again, this is part 2 of the video. You need to learn and understand liquidity. You need to understand fair value gaps and order blocks, and then you need to understand market manipulation and the market makers and the smart money business model. And then this strategy, if you stick to this, you'll become a profitable trader. Super powerful. And then the quote I'll leave you on is, when you have the market by the balls, squeeze harder. Okay, so whenever you enter one of these pivot points, these reversals, and you get it right, double down and hold on. Okay, hold on. Move your stop loss every three candles. Okay, or 3 candles in your direction. Okay, one of those 2. And you want to just hang on, right? And then you want to make as much profit as possible. And this will basically increase your win rates. Okay, and then always enter with 1 contract just to be safe. But then as soon as you get the confirmation, double down and hold. Check out our school channel. So check out our free school channel. It is the Day Trading Mentorship. But I'll have a link in the video down below. And yeah, if you want to trade live or if you want one-on-one coaching, I'll put those links down below too. Just book a call and I will work with you until you're profitable. I don't do one-on-one for free. Day Trading Mentorship if you want to come hang out and learn. All right, Robert Lyon, peace. Happy trading.